Everyone here knows we've got a lot of serious problems. I'm not going to talk about them. I just want to kind of refresh our memories on the issues that we're wrestling with. If you're not familiar with the work of Johan Rockström, he wrote a paper in 2009 called A Safe Operating Space for Humanity. And it again was one of these, I think, new ways of thinking about issues that were very informative and clicked in my brain. And it's this idea that in a finite planet, there are these biochemical systems, and as the economy continues to grow, we begin to overrun the boundaries of those systems. And the idea of this diagram is that climate change up on the top there that we're familiar with, the red shows we're already breaching through the safe space, the green space. What's more alarming, of course, is over on the right is the nitrogen cycle, where we've way blown through the safe operating space. And of course, people will debate where the lines are and whether it's too conservative or not, but conceptually it I think makes sense. And then the one that's most frightening of all, of course, is the biodiversity issue. It's one that most people, myself included, don't really understand what that means, but the people that do understand what it means tell us this is very, very serious, and we're in the midst of a great extinction, and obviously we're way through the natural extinction rate that has allowed life to be sustained on this planet. And I think all of us in this room probably recognize that it's our economic system, it's 7 billion people going to 10 billion, and the global economy that are the root causes of a lot of these issues, and that's why we're all here today. And then on the social side of the equation, again, if you're not familiar with the work of Wilkinson and Pickett at the Spirit Level website, they're in the UK. This is sort of a summary chart that aggregates data from 13 other charts, and the idea here is that whether you live in a wealthy country or a poor country, or whether you are wealthy or poor, if there's high levels of income inequality over on the right, you can expect that there will be high levels of health and social problems. And that kind of changes the whole inequality debate. Because if you're fortunate, like most of us in this room, you kind of think of the inequality issue as a moral issue, but it's a moral issue that we've had forever, and who am I to fix that problem? But in fact, living in the United States, upper right, that's a bad place to be. We have very high inequality and growing higher, as you all know. And remarkably, we measure the worst in an aggregate measure of the 13 measurable indices of health and social problems. So I created this slide to kind of summarize the way the world works through the lens of a Wall Street financier. Things get very simple when you work on Wall Street, and that is that the planet, and this is actually basic economics, it's not just Wall Street, the planet at the bottom provides us with natural resources. It'd be too complicated to put in the diagram, but it also provides us with waste sinks to put our wastes. That's there to provide inputs to the global economy. And of course, the global economy is run by the masters of the universe in finance, who allocate capital to decide whether we build a factory here, or we buy something there, or we do something over here. And we get to sort of pull the purse strings, and it's this beautiful, magical thing. Actually, this is more like one would think the world should look, and finance should be in service of a real economy, and the real economy is not really serving the planet, but it's embedded in the planet. And so I think it's just a way to think about how profoundly backwards we have things, and we're in real trouble. Point one, there's no happy story, easy answer, silver bullet point, call it whatever you want. I think this is complex, and it's going to be a tricky chime, but that's a challenge, and humankind has had huge challenges before, and we've risen to them, and they may not have always been fun, but they've built character and made us better in the process. No, I mean that. I mean, my dad was in World War II, and I was talking with him a couple years before he passed away, about 2 years ago, and talking to him about his life, and he was off the shores of Normandy, and he was in the Pacific, and he saw a lot of hard things. And what he wanted to talk about at age 92 was his experience in the war. And so it defined his life and gave meaning and purpose. And I think this is our war. And it will define and give us purpose, but it won't always be fun. One of the aha moments for me was to understand that modern science, truly modern science, not what we think of as science and what's often taught my kids in school, which is 90% Newtonian mechanics and then a little bit about quantum, which the teacher doesn't understand and my kid certainly doesn't understand, since I certainly don't understand it. But quantum mechanics and these universal spiritual ideas like oneness and do unto others as you would want others to do unto you are remarkably aligned. And so, as Peter likes to say, we need a new intellectual map in order to begin to tackle these challenges. And it really is, as Carol mentions, a different way of thinking, a new way of thinking. The Anthropocene is the idea that we've entered a new geologic era, an era that is going to be defined by man's influence on the biosphere. And people will debate when it started. It probably started in the Industrial Revolution or maybe even before that. But sort of we've had this aha moment that we actually now live in the Anthropocene, and it's going to be a very volatile time, a volatile place. And most of the mainstream debate about what's wrong with the economy and how to fix it has no context about something's different. And so we look to historical precedents, we look at cycles, we think of this as a recession or a depression, and what did we do last time to get out of it? And so we're just in this ongoing perpetual system. But in fact, probably the most important point that I've learned is that this time is actually different, and we need to think differently as a result of the reality that, unlike Thomas Friedman, the world is flat. The world is not just flat, maybe flat, but the world is full. And that changes really everything, the way we think about economics, business, finance. To me, this analogy back to Copernicus and the idea that we all used to believe that the sun revolved around the earth. And of course, that idea was promoted by the church, so it was kind of like the sun revolves around the earth revolves around the church, and the church has a direct hand to God. And that was kind of the worldview. And so challenging that was a really radical thing to do. And I think challenging the perpetual growth paradigm that we live in today with a mechanistic worldview is of a comparable degree of audacity and radicalness, I guess, and makes people equally uncomfortable. And I imagine those of us in this room that are working on this work are likely to get increasingly uncomfortable as the powers that be respond the same way the church did to Copernicus and Galileo, who ended up proving Copernicus was right with his telescope. What's interesting is that apparently it took 80 years before Galileo actually proved that Copernicus was right. So, we're going to live through a generation or two. Things will happen faster now, I imagine. But this is not someone comes up with a new idea. And of course, Limits to Growth, the book was written 40 years ago. So this is not a new idea. We're already into that 80-year period. And it's remarkable how little the mainstream is even talking about it and wrestling with it. And I really like the idea that, when you're motivated by essence above the line, the below the line becomes above the line. And we actually talked about this a little bit, and this diagram doesn't quite show it. But if you're operating only below the line, which I would argue 90%, maybe more, of the global economy is thinking in the below the line kind of context, then the best you can do is do less bad than what you're doing today, which is largely, I would argue, what the sustainability conversation has been about in the mainstream. So this was a really powerful shift for me. The only thing I would add is that, imagine this is all about potential up here. And of course, the potential that's not yet seen is vast. And so imagine looking back at today, imagine yourself 50 years from now, but looking back at today, the real picture looks more like over on the left, because there's this massive potential for regenerative opportunities that we don't yet see, and they haven't yet manifested, but they're there. And it makes the scale of the problems that we're dealing with somehow seem more manageable if we can imagine that what we see today is just a tiny speck of what the potential is. This is a Bill Reed diagram. And the idea again, and I was first introduced to this again by Anthony, but again, for me it really shifted the thinking, because it was this idea that getting to sustainability was just kind of making things 100% less bad, but didn't at all tap into this potential that is how living systems work and how nature is sustainable, not because it sets sustainability as a goal, but because it operates in this regenerative process, and sustainability is an outcome. It's not a goal. And so moving up to the, from lower left bad, upper right good, we can see sort of the progression, and it sort of, again, for me, made the discussions about greening the economy and sustainable this and sustainable that, somehow it made sense that was insufficient and not getting us where we needed to be, and that we needed to constantly be pushing to this upper right, and if Carol did this diagram, there would be a star in the upper right, which was essence, and that applies to all wholes. We started this project called the Field Guide to Investing in a Regenerative Economy, and truth be told, when we first started, we called it a field guide to investing in a resilient economy. And but the idea of resiliency seemed a subordinate idea than the idea of regeneration. Resiliency is obviously an important quality, but it seems to be more at the kind of right at the line, maybe slightly below the line in the maintain and operate mode. So we discarded that and we renamed it regenerative. But what's fascinating is that the subject matters we studied really came to life even more once we had shifted our own thinking into this regenerative paradigm. And so, what's fascinating to me is that this regenerative idea, whether that word is used or not, is happening everywhere. The idea of the field guide was to study what we see as transformational projects, study them carefully, and try to tease out of them the elements or principles that make them important, as opposed to being just another project, and then use those to try to construct this new, if you will, conceptual framework, so that you have a generalizable concept that you can then apply to other needs and other activities. Capitalism as we understand it is this simplified worldview where you have natural resources you have labor, and then you have capital, and the game is to optimize the financial returns to capital so the capitalists can be rich. That's a fairly basic and simple system, and what I'm proposing in, quote, regenerative capitalism is we need to evolve our understanding of capital to a much more complex and evolved state. And then secondly, the second part of regenerative capitalism is the regenerative part. And these elements were my best attempt at a first stab at what it would be, what are the elements that describe a regenerative economy, a regenerative capitalism as understood. And these are borrowing from Peter Brown, this idea of right relationship, the idea that there is a right relationship between the human species and the human economy and the natural systems in which they're embedded. Entrepreneurialism, one of the great hopes, I think, is that humans are innately regenerative, or entrepreneurial rather. The word entrepreneurship was actually stolen by the French and applied to mean business, but it actually is the state of the innate ability to become is apparently, going back to the Sanskrit, something that is innately human. And so one of the reasons to be optimistic is that all of us, not just the Steve Jobs of the world, but all of us are inherently entrepreneurial, and that seems inherently regenerative to me. Wealth needs to be understood holistically. I'm going to go quickly through these. A much more democratized understand. And by the way, these are all in the paper, so you don't need to write them down. They're also in the summary that's in your book. We need a much more democratized or fair or equitable sharing of the wealth, holistically understood. McKinsey's come out with this idea of a circular economy. I haven't read the whole paper, but I think it's largely below the line, sort of reducing waste, which is great, but in itself only a piece of the puzzle. but certainly given where we are, having a massive improvement in the resource efficiency of the economy is a critical element of a regenerative economy. And a regenerative economy does need to be resilient like natural systems are. And finally, this idea of place. And this one is one perhaps of the most challenging. On the one hand, the local economy movement, Bali, the local living economy, in a sense, it's easy to connect the value of the association of place. But we also know we live in a global economy, and there are such things as AT&T and Exxon and the automobile industry and the airplane industry. So how do we put these global enterprises into the context of a place-based economy? And I don't have a good answer for that, but I think we need to wrestle with that one, because clearly this idea of place is directly connected to Carol's idea of essence. So then we get to finance, and the basic idea of Capital Institute is that if we're going to shift the economic system, it's going to require a fundamental transformation of finance. I think most people intuit that, and certainly do after the financial crisis if they didn't before it. But that is true even if we didn't have a financial crisis, I would submit. And even if every banker was a Boy Scout and highly ethical, or a Girl Scout, and we didn't have the kind of problems we had, the fundamental principles in finance are in conflict with a finite planet. But this is really, really profound if you think about it. Internal rate of return calculations are flawed, and yet billions, if not trillions of dollars of capital get invested using some form of an internal rate of return calculation. I've thrown out two ideas in my past work to demonstrate these flaws. One is this idea of financial overshoot, and I would submit that if we are in ecological overshoot, then we are in financial overshoot, because financial assets are valued based on this flawed assumption of exponential growth forever and ever and ever. And as you all know, the value of a financial asset is determined by a whole bunch of things, but probably the most important one is the growth rate of the cash flows that the financial asset represents. So when you see the stock market crash, it's usually because someone has sort of put out a statement that says the growth rate of the economy is going to slow down, and it causes stock prices to go down. It's nowhere more evident in this idea of stranded assets, where the science now tells us that if we're not going to breach the 2-degree warming threshold, said differently, the 2-degree warming threshold translates into a quota of carbon that we can release into the atmosphere. And these are all based on probability analysis. It's not hard, arithmetic, but if you use even what I would call unconservative probability scenarios, like 80% confident, not 99%, which is what we would want normally to be looking at, the implication is that if you translate the carbon embedded in fossil fuel reserves, the implication is we need to leave at least a majority, and in fact probably more like 80, 90% of the fossil fuel reserves that we've already discovered. They're already on the balance sheets of corporations. They're already on the balance sheets of nation states like Saudi Arabia, Venezuela, Canada, the United States. Our whole fiscal situation is embedded in that, is royalties from our oil and gas rights that we've licensed out. So if you have to leave these reserves in the ground, those royalties go away. So the whole financial system of the world is built on this flawed assumption that we're going to burn 80% of this carbon. Now, I did a little blog, I did a very rough estimate, and this was like 2 years ago now. I calculated that 80% that we need to leave in the ground is worth $22 trillion at current market values. I actually think it's closer to $30 trillion. And as a point of reference, because trillions get hard to keep track of, the subprime crisis was a $2.7 trillion direct write-off. And we know what that did to the global economy. And that's just the fossil fuel assets. That's not all of the other companies' market values, and that's not the debt capacity of all the countries that have too much debt, because all of those are predicated on exponential growth. So the debt to GDP ratio that's gotten so much attention as a result of the financial crisis, those acceptable numbers are all based on 3% growth forever. Well, if 3% turns to 2% or 1%, much less you can go to conferences now where the name of the conference is the Degrowth Conference. We're in overshoot. We're in financial overshoot. What I would submit is that since we know investment drives economic growth, if there are limits to economic growth because we can't decouple economic growth from material throughput, then it would seem obvious that there must also be limits to investment. And I actually think we live in a world where we have a shortage now of real natural capital relative to the stock of financial capital that's being invested. And that's in part why we're doing all this speculative stuff, because we can't find real investment activity to do with it. But it's also just a really unfortunate reality. We have to somehow think about how to recycle excess financial capital back into degraded natural capital. And that's a hard one. So again, how do we think about, well, what are the elements of a regenerative financial system to serve a regenerative economy? And these are the ones I came up with. And again, this is a draft. I really welcome input and feedback. But the first point is that we need to shift finance to understand that it's a means to an end, not the end in itself, the reversal of the role. That alone is, we can spend the rest of our lifetime on how we would cause that to happen. Finance needs to be an ethical business. That doesn't take a genius to suggest. And in service of the real economy as opposed to master of the real economy. There is supremacy of relationships. One of the flaws, I think, is that as we've atomized finance in a mechanistic way, the connection between lender and borrower, investor and company has become increasingly dispersed. And so when you have a bad mortgage, you can't even figure out who owns your mortgage. And so it's hard to operate out of essence when you're dealing with abstractions of securitization taken to the nth degree. Transparency, I think the point goes without saying. We need a new understanding of real wealth as opposed to financial wealth, and a desire by the financial system to develop and encourage real wealth as opposed to financial wealth. As I mentioned in the prior comment, finance as a system as a whole and financial capital needs to be rightly sized relative to the real economy and relative to the biosphere within which it's embedded. That's a really hard one, but that's what needs to be. This idea of competition versus collaboration. I had a fantastic conversation with Janine Benyus over a bottle of wine and 3-hour dinner about how in nature it's inherently collaborative. And yes, there is competition in nature, but fundamentally it's collaborative. And nowhere is that more missed than on Wall Street. Nature is collaborative, particularly around edges. So this idea of edges is really important. That must have been in the regenerative elements, the edge effect. And then finally, obviously, we need a much more resilient financial system, but in a good way. Our current financial system has become very resilient because we've got $3 trillion of central bank buying of bonds in the United States and $9 trillion of central bank buying of bonds to support the thing globally. That's not sustainable. In conclusion, my work and my belief is that somehow the important leverage point here gets back to this question of the purpose of financial capital in an economic system. And this idea that the purpose of capital is to sustain life and not the other way around seems to be a very central problem for us to tackle. I don't begin to think I have the answers on how we do that, but at least defining what has to happen if the system is to be regenerative and therefore sustainable is a good place to start.